Pick n Pay's turnaround plan is yielding results. The retailer has narrowed its full-year losses. It's reported a headline loss per share of 61.5 cents. That's more than half the prior year's slump into the red. Looking ahead, Pick n Pay now expects to break even a year later than planned. That will be in 2028. The firm says this will be achieved as it focuses on building long-term operational strength through a more deliberate strategy. Altron has delivered an almost 60% jump in annual profit. That's as the technology firm focused on higher margin quality revenue. Commenting on the numbers, CEO Werner Kapp says the results reflect the disciplined execution of the firm's strategy despite heightened economic and political uncertainty. A final dividend of 50 cents per share has been declared. That's a 52% increase on last year's figure. Barloworld has reported lower earnings at the halfway stage. That's as the industrial group's ration unit continues to weigh on its bottom line. Headline earnings per share fell 20.5% in the 6 months to end March. Nevertheless, an interim dividend of R1.20 per share has been declared. African Bank has grown its customer base. It services 6.1 million people on its platform, and this has translated into financial gains. At the halfway stage of its financial year, net profit after tax rose 15%. Going forward, the group says it will focus on driving growth and building on its solid financial position. That's as it eyes becoming a fully fledged bank. Dis-Chem expects full-year earnings to increase by about 20%. The beauty and pharmaceutical giant gave no reason for the expected rise, but earlier this year it noted a solid performance in both its retail and wholesale segments. The firm will release its results on the 30th of May. Renergen has secured a significant victory in its ongoing dispute with Springbok Solar Power Plant over helium rights in the Virginia gas project. The Mineral Resources Minister has dismissed Springbok Solar's appeal against Renergen's helium rights and so confirms that helium is a byproduct of petroleum, natural gas, and falls within the scope of Tetra4's existing production right. Renergen CEO Stefano Marani says the decision closes the chapter on the question of the group's helium rights once and for all. Further afield, U.S. President Donald Trump has backed off his threat to speed up 50% tariffs on imports from the European Union. This after agreeing to extend his deadline for trade talks until July the 9th. After the head of the EU executive body said the bloc needed more time to reach a good deal. Here's more detail.
Donald Trump has delayed imposing 50% tariffs on goods from the EU. The president told reporters he would put back the move until July, after speaking to European Commission Chief Ursula von der Leyen.
And she asked for an extension on the June 1st date, and she said she wants to get down to serious negotiation because I've told you specifically, but I told anybody that would listen, they have to do that. And we had a very nice call, and I agreed to move it.
Trump had threatened a June start date on Friday. He acted after becoming frustrated by the pace of talks with the EU. The threat sparked fresh turmoil on global markets at the end of last week, sending stocks skidding again. In social media posts on Sunday, von der Leyen welcomed the delay and said Europe was ready to move fast on talks. Trump also addressed the general purpose of tariffs, agreeing with past comments by Treasury Secretary Scott Bessent that the goal was not for the US to start making low-cost items like textiles.
We want to make big things. We want to do the AI thing with the computers and the many elements. But the textile, I'm not looking to make T-shirts, to be honest. I'm not looking to make socks.
Now the backtrack on EU tariffs may be welcomed by markets on Monday, but global stocks have been roiled for weeks by Washington's erratic policy-making on trade. Critics say the uncertainty is making it impossible for businesses to plan for the future.
And NVIDIA will launch a new artificial intelligence chipset for China at a significantly lower price than its recently restricted H20 model. The company is also planning to start mass production as early as June. There's more insight in this package report.
NVIDIA will launch a new and cheaper AI chip for China to avoid US export restrictions. That's according to Reuters sources. They say mass production of the new silicon will begin as early as June. The current H20 chip was effectively banned for sale to China in April. Washington wants to slow the country's development of AI and other technologies. The new product will reportedly use conventional memory instead of the so-called high-bandwidth memory used by some advanced chips. It's expected to be priced at up to $8,000 per unit, well down on the $10,000 to $12,000 for the H20. An NVIDIA spokesperson would only say that the company is still evaluating its options. The sources say an earlier plan to produce a downgraded version of the H20 didn't work out. NVIDIA boss Jensen Huang says the firm's market share in China has plunged from 95% before export curbs kicked in to 50% now. He warned that if restrictions stay in place, more customers will buy chips from Chinese rival Huawei. On Monday, Huang told the Stratocherry podcast that NVIDIA had been forced to walk away from $15 billion in sales. It has also written off more than $5 billion in inventory.